Hello, everyone, and welcome back to the podcast. What follows now is a digest of HIM's Q2 2024 earnings report. Stock prices track free cash flow per share levels over the long term. And as you can see in the graph below in grey, HIM's quarterly free cash flow has grown from $9.9 million to $47.6 million in a year. This is 480% growth year over year, which points to management's notable ability to deploy capital in the healthcare space. In turn, total shares outstanding have only increased from 211 million to 217.1 million in the same period. As a result of this dynamic, free cash flow per share levels are going up. Over the long term, the company's ability to deploy capital and convert it into higher levels of free cash flow per share should equate to a gradually higher stock price over the long term, with or without GLP-1. I hear many people saying that HIMSS will be killed by competition, but the free cash flow growth is indicative either of a defensible and scalable operation or of the fact that the $4 trillion US healthcare industry has little interest in HIMSS's operations. Statistically, I tend to believe the former is more likely, with Walmart having shut down its telehealth operations in April. If indeed HIMSS was as susceptible to competition as some believe, it would hardly produce any free cash flow at all. Further, as you can see in the graph below, the percentage of subscribers on HIMSS receiving personalized treatments has gone up from 22.8% to 42.1% in a year. This makes the operation harder to imitate, but also makes outcomes better for patients, because dosage is as important as selecting the appropriate medication. The rising personalization thus continues to strengthen the moat and increase the rate at which HIMSS compounds goodwill with customers. Meanwhile, the market continues to speculate about the GLP-1 business, foregoing the truly important aspects of the company. Beyond personalization, the main driver of the business is the speed with which HIMSS launches and grows new verticals. By launching verticals faster, HIMSS increases ARPU, average revenue per user, faster, and thus increases free cash flow per share levels quicker than otherwise. Historically, it has taken the company just under 2 years to grow a new vertical to meaningful scale. HIMSS launched its weight management business 7 months ago, and the operation has scaled to 100,000 customers and $100 million in revenue run rate since, thus achieving material scale in approximately 1/3 of the time. This implies that the business will accelerate considerably going forward. Free cash flow per share levels are thus set to rise faster than we have seen over the past year, and this should send the stock up over the long term. Additionally, the market is thinking about the GLP-1 business as a one-off operation driven by supply shortages. The business is in fact similar to other verticals in that it comes down to providing better patient outcomes in an increasingly convenient and affordable way. This essentially comes down in the weight management business. In the weight management business, but this is true to all the other verticals, this comes down to giving physicians and patients access to the nuance required to minimize side effects and maximize outcomes. Here's what Andrew Dudum, the CEO, said about this during the Q2 earnings call.
I'll start by saying we're currently still seeing, and wouldn't expect this to change, thousands of patients coming to us every day struggling to get access to these GLP-1s, including tirzepatide. I think there's really established precedent with regard to the compounding exemption, which allows for this level of personalization that we've spoken about for patients that need it. And I would expect that the clinical necessity of that will be really clear. With these medications, as people know, there are real side effects. There are really no one-size-fits-all dynamic. So we think there's a really robust platform that extends well beyond the shortage across a number of these avenues.
The bad news this quarter is that management expects gross margins to continue declining as the weight management vertical continues to scale up. In the graph below, you can see how gross margin has been trending down, declining from 83% in Q4 2023 to 81% this quarter. According to management, it usually takes HIMSS a while to operate the gross margins of a given vertical and the rapid growth of the weight loss vertical is weighing gross margins down at present. Here's what CFO Yemi Okupe said about the matter in the Q&A section of the Q2 earnings call.
I think as the cost structure stands today, on a gross margin basis, GLP-1s do have a dilutive effect on the gross margins. I think we're confident that as we continue to make investments in verticalization, optimizing processes, continuing to look for optimization opportunities across the logistics, the economics and what we've observed in other specialties as they started to season a bit will only mature. And so I think that the price points that we put the GLP-1s at are a reflection of us being able to utilize this muscle historically in the past.
As you can see in the graph below, Hims has a noteworthy track record of optimizing margins. As I've explained in the previous deep dives, Hims has managed to increase margins and eventually print cash while assembling a highly complex, vertically integrated infrastructure. Thus, I am currently comfortable betting on management's ability to fix the presently dilutive nature of the weight loss business at the gross margin level. To conclude, I remain long this company because I believe that free cash flow per share levels will continue trending up. The company's core value drivers are accelerating, and it looks like Hims will be deploying and maturing verticals at a faster rate. As a result, I expect free cash flow per share levels to increase non-linearly over the coming years, and the stock will likely track along. Until next time, and thank you very much for joining me today. Just before finishing off, I'd like to ask you one quick favor. These deep dives are for free, and so the only way this grows is with your help. So please, can you share this with one friend who you think will enjoy it? Thank you very much, and take care.